With this video, I want to cover some basic concepts in technical analysis and then show you how you can use them in crypto. Of course, those are only indicators. You should never trade based solely on technical analysis. It's important to have fundamental analysis, maybe a little bit of quantitative analysis, so use proper math to do your evaluation. However, those indicators can be helpful in various scenarios. And I want to start with Bollinger Bands because I think they are cool and they are often used for determining whether a particular asset is overbought or oversold. And in this case, should you buy it or should you sell it? So none of this is, of course, financial advice. I'm going to show you real-life examples, but of course, this is only going to be purely educational, so do your own research always. And subscribe to the channel if you want to have more videos like that. So Bollinger Bands, basically a technical analysis tool defined by a set of trend lines plotted to standard deviations away from a simple moving average. So the way it will look is basically you will have this kind of asset pricing, as you can see here on the on this image, with the lines above, the lines in the middle, and the line below everything. And basically the indication here is that whenever the chart is touching the upper line, it means that the asset probably is overbought and you should start selling, and the other way around, if it touches the lower line, it's oversold and you should start buying. It doesn't work always like that, of course, because it's just like one of the indicators, but in this particular case, as you can see, it predicts it pretty well, and we're going to see an example on the case of Ethereum pretty soon. So basically, this is coming from Investopedia, really recommended as a source for quick summaries for most of the concepts in trading. Really good source. It provides most of the knowledge you might want if you want to just have general knowledge about trading, not necessarily crypto. Always good to have those. So this is what you can see here. Bollinger Bands, highly popular technique. Many traders believe that the closer the price moves to the upper band, the more overbought the market, and the closer the price moves to the lower band, the more oversold the market. And John Bollinger, who invented them, has set of 22 rules to follow when using the bands as a trading system. So I'm going to link those as well, the set of rules, but let's have a look at this, how it looks at the ETH price. I'm on OKX. It's really easy to put those Bollinger Bands here. So if you switch to trading view, here I'm on a trading spot, then you can first of all choose the line for 15 minutes. I already have Bollinger Bands. If you want to put them on your chart, you have to click on indicators. There's a small dash that you can use, and you can basically search for Bollinger Bands here, and there's a bunch of them. And just click on them and they will appear on your chart. So that's it. Let's go full screen with this chart to have a look at what's happening here. So on the 15-minute chart, you can see that to some extent it works pretty well here, especially on the ETH price. When it went up to 1343, then basically it touched the upper bound and then it fallen. However, as you were seeing before, it's not a perfect indicator, especially here, because it was touching this line for quite some time. So if you were going after the Bollinger Bands purely, then you would actually start selling around here instead of waiting for the full price here. So that's why going after a single indicator, especially single technical analysis indicator, is not the best option. It won't allow you to maximize your revenue here. However, it's still a pretty good and pretty popular technical analysis indicator. So you can also go for a smaller period of time, 5 minutes, and it will change also how the lines will behave. So as you can see here, it's much more visible, even in the market going sideways, it's much more visible what's happening here with the 5-minute charts. Same for 1-minute charts. There you can see there's even more movement, and to some extent it provides pretty well what's going on. However, not always. Again, you can have a look here that it's going down. You should be probably the indicator is telling you here that you should be buying around 1323. However, it's still going down, 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 and it only realizes its price here. So that's why it's important to have a couple of technical indicators, and also think about the time period that you are buying for. Because if you're using one line candles, then basically it means that you should always go for like a very short period of time. So to some extent, it would make sense to buy here when it touches the Bollinger Bands, but you would have to sell within a minute or two, right? To really be able to catch this going up, because then it goes down and goes down. This is more tricky, and that's why we need fundamental analysis. We need to look at the volume, who's buying, what's the general narrative. I would never recommend going just after one technical indicators, but starting definitely with Bollinger Bands is a good start for generally seeing what's happening with the price. Where are we from the average pricing? Because this is what tells you about this is what Bollinger Bands tells you. Really cool stuff to start. So look at the definition again for yourself, and then start looking at the prices of Ethereum and Binance. Most of the crypto exchanges have those kind of tools, especially if you go to the trading view. I'm here on OKX showing you how you can do it yourself. So subscribe to the channel if you want to see more content like that regarding technical analysis, quantitative analysis, and fundamental analysis as well. See you in the next video, and remember, all of that is purely educational, no financial advice. You should never trade based on one indicator or partial knowledge. Thank you for watching.